morning, welcome to IG's early morning call. It's the final trading day of October 31st, Tuesday. The headlines this morning, we're leading on the foreign exchange markets and the dollar yen back up above 150 yen. The Bank of Japan this morning coming out with an interest rate decision. It's maintained its position on ultra-low interest rates, but it's loosened its bond yield control policy, which does have an effect. And the effect of that has been to push the dollar yen up, in other words, weakness for the Japanese yen. We're watching earnings out this morning. There's some big numbers today from BP. We've got the company coming through with its replacement cost profit falling short of estimates for the third quarter, but the company's come out with another share buyback program. And the US earnings season rolls on today. We've got a ton of companies out today. We've got numbers due this morning before the bell from Caterpillar and Pfizer, both all sessions on the IG platform, and other stocks as well to watch. And then after the closing bell this evening, Advanced Micro Devices on its third quarter numbers, all sessions on the IG platform. Take a look at volatility. It was a day of positivity yesterday. In fact, interestingly enough, I was looking at some analysis from Tasty Live, and they have been monitoring the movement, intraday movement on the markets for this year. And they're saying that on the whole, Mondays have been a pretty good day for trading long on equity markets. And that's exactly what happened yesterday. And this is why we saw this volatility steer below 20 in yesterday's session. And we're holding on to the losses that we saw in yesterday's trade. We've got a crossover now on the MACD. Technically speaking, indicating further losses, but not necessarily the case, although we do have gains on the equity markets expected at the moment, 73.35. It's about 10 points in the bag on the FTSE 100 compared to the numbers that we saw at the close yesterday on the cash session. So we are looking for a slightly higher start. And it doesn't stop in London either. It goes across Germany, where we've seen a push high, and you can see we're pretty much the top of this candle with the long wick at the bottom, relatively speaking, and that indicates that we've got people wanting to buy into this market. So we're long on equities across the board. Same sort of thing on the French market, buying into what was a strong day yesterday at 68.46. Again, around about 20 points, I think 18, 19 points on the bag, far on from what we saw yesterday. That's at the cash close. So 24-hour markets indicating a stronger start to the trading day ahead. Let's take a look at what's been happening in the Asia-Pacific markets. So we're seeing a mixed bag overall. The Nikkei and the S&P ASX 200 closing up on the session. There's more problems in China, highlighted with more economic data on the downside. And this has represented itself with a drop of 1.5% on the Hang Seng stock index. Yesterday, stocks rallied across Wall Street, the S&P 500 reclaiming ground a way out of correction. Traders kicking off a big week filled with Federal Reserve rate decisions, the job reports, and Apple's earnings as well on Thursday. So a gain of 1.5% for the Dow, somewhat less than that for the S&P 500. Nasdaq Composite up 1.16% as at the close of the cash session yesterday. I want to take a look at the Tech 100 as we see the markets, as I say, up 1.1% yesterday. The Nasdaq in today's session on this green candle, if we look at the chart, you can see here that we are up at the moment on from the close yesterday. But the biggest movements seen was that move in the Dow with that punch high yesterday, closing not too far away from the top of the 24-hour candle and building on that this morning at 32,945. So people buying into some of these more traditional older companies, not tech, but some of those companies with earnings, with value, with growth, with dividends. And we're seeing this repeated again and again. Yesterday, we saw good numbers out from Mackie D's, which saw a push higher in the market. Today, we got Pfizer and Caterpillar before the bell, both representing the old economy. So we are looking there potentially for some earnings out this morning. It could give us a steer into the start of today's US session, which starts at 12:30 today, and I'll be 1:30 today UK time, and I'll be there at 12:30. Beat the Street, taking a look through into some of the news that we've got out from those companies, breaking news headlines on earnings this morning. The Bank of Japan has increased its flexibility on yield curve control, but it's kept interest rates unchanged. Let's take a look at what we saw out overnight. As widely expected, it maintained its negative 0.1% target for short-term interest rates, and that for the 10-year government bond yield around 0% set under yield curve control. But the Bank of Japan redefined 1% as a loose upper bound rather than the rigid cap. It also removed a pledge to defend the level with offers to buy unlimited amounts of bonds. It's also revised up its price forecast to project inflation well exceeding a 2% target for 2024, underscoring growing conviction that conditions for phasing out ultra-loose monetary policy are now beginning to fall into place. There's some speculation it could come by the end of the year. Inflation is staying above the Bank of Japan's 2% target for the 18th straight month in September. Let's take a look as what else is happening in the Japanese economy, because factory output rose 0.2% from the previous month against the median market forecast of a 2.5% gain. And retail sales up 5.8% in September from this time last year, marking a 19th straight month of gains and roughly in line with the median market forecast for a 5.9% increase. Now, all this positive news is all very well, but without more reasons to hold yen, we're seeing the yen fall again, pushing the dollar back up above the 150 level. And you can see clearly above that red dotted line, which takes us up there to these levels here. And the last time we were at that level, remember, October last year, we saw the Bank of Japan come in and defend the yen with a series of operations in the foreign exchange markets to support yen, and that pushed the dollar down. But we don't see any real appetite for the Bank of Japan to do it this time around. Now, China's manufacturing PMI data has been a real disappointment today. A surprise contraction in October, indicating an uncertainty of the economic recovery, and calls as well for more economic support from the authorities in China. The official manufacturing number fell to 49.5 in October, down from 50.2 in September. That was already a weak number anyway, taking the reading back into contraction. Meanwhile, non-manufacturing PMI stood at 50.6 in October. That was down from 51.7 in September, but still does represent an expansion. It comes just a day after HSBC said it saw an end to the downturn in China, but apparently none of it. The US dollar trading against the Chinese yuan not too far from recent highs. Now, let's take a look at some of the other economic data that we've got today. I want to begin, first of all, in Germany. Yesterday, remember, we saw details coming through of the contraction in German GDP for the third quarter. Today, we got retail sales falling 0.8% in September month on month. We had been expecting a drop, but there the expectations were for a drop of 0.5%. So that is worse than expected. In France, we get preliminary GDP numbers. We've seen the numbers out around about an hour ago. The first look at the third quarter was up 0.1%. So there's an expansion. Estimates have been for that sort of area after an upwardly revised 0.6% growth in the second quarter yesterday. Meanwhile, we've got GDP coming out in the Eurozone a little bit later on, and that's expected to be flat after a 0.1% expansion in the second quarter. Consumer price inflation growth forecast in the Eurozone as well. That's expected to fall to 3.1% in October year on year from 4.3% in the prior month. Just quickly look at what we've got in terms of the states later on today, in terms of numbers out a little bit later on. A few macroeconomic indicators expected, amongst them S&P Case Shiller home prices and Consumer Board consumer confidence numbers. Ahead of that, just a quick snapshot of where we are for the euro dollar. We're maintaining this rising line of support. Yesterday was a relatively strong day for the euro against that weaker US dollar, and we're seeing us holding on to the point at which we closed out yesterday's session at 106.14 there at the moment. Lots of companies reporting earnings and other sort of news this morning. BP tops the bill on its third quarter figures. Third quarter adjusted net or underlying replacement cost profit, $3.29 billion. That sounds a lot, but it was short of expectations at just over $4 billion. But BP has also announced a further $1.5 billion share buyback program. The company says in the fourth quarter, it expects oil prices to be supported by OPEC plus production restrictions and the continued demand rebound. BP, I suspect, is going to move in the markets today. We saw a drop yesterday on the session. We closed out at levels not seen since the 12th of October, and I suspect we could well get some further downside today. In terms of the technical support on the downside, there's more fundamental ways of measuring this, but technically, below where we are, we're opening at 525. We've got support kicking in at the 61.8% retracement from the lows that we saw back on the 5th of October. That would take us down to 517 from 525. That's only 8 pence, but we've got further support down at 506 and then you drop below the £5 level, passing through the 200-day moving average down to this total retracement down to 489. And I suspect we could well see a little bit of a drop at the start of today's session as a result of that news out this morning. Let's stay on the charts and just quickly look at what's happening with Vodafone, because we got some news out there today. This big 70% loss of value from the highs we saw back in January 2018 down to these lows recently. We're not too far away from that. We're opening at 76.6 pence. We've got news out this morning that Zegona, the Spanish telecoms company, is to buy Vodafone Spain for 5 billion euros. Now it's split, it's 100% sale. It's split for 4.1 billion euros in cash and up to 900 million euros in the form of redeemable preference shares. Vodafone as well will be engaged to provide certain services to Vodafone Spain for a total annual service charge of 110 million euros. So I think all told, it's a positive news headline. So where do we go from here? Upside resistance could well kick in. There's minor resistance here at 79 pence. There's another one up here at 82 pence. We're opening at 76. I suspect this area up here could be of interest as a total sort of price target area, because we also got it coinciding with the 200 period moving average. So if you're long on this at 76, stop goes underneath here at around about the 70 pence level. 76 is where we open, and 82 is where we get the major resistance kicking in. So technically, that would be your price target if you're long on Vodafone at the start of today's session. Take a look at automakers. Stellantis out with news this morning on its third quarter numbers. Of course, this is one of the companies that's been in the thick of it in terms of the UAW, the United Auto Workers Union strikes in the States. It owns Chrysler. But sales up 7% in the third quarter to 45.1 billion euros against expectations of 43.7. So that's better than expected. The 6-week strikes in the US over the salary increases had an overall negative impact on the group's revenue of around about 3 billion euros. Chief Financial Officer Natalie Knight said in a media call to those strikes would cost Stellantis less than 750 million euros in terms of profitability, adding that was the smallest impact amongst the big Detroit three. We've already seen GM and Ford suffer as a result of all that. So let's take a look at the impact of recent news coming through in terms of strikes on its shares. The stock will open this morning at 16.99 at the top of the hour. These are good numbers, broadly speaking. So is there an opportunity to buy this? If you are, stop goes underneath this sort of area down here at 16.30. 16.99 is where we're opening, and that potentially could see us up on the market in the session in today's trade. We'll have to see how things develop at the top of the hour. That's not a trade recommendation, just a thought on where things could go. Now, we've seen some news out recently from Heineken and Carlsberg suggesting that inflation in the sector of the brewers is causing a little bit of a headwind. We've got the world's largest brewer out with numbers this morning, AB InBev. It posted a mixed report for the third quarter. Let's take a look at those figures as we saw them produced. Sales are up 5% to $15.57 billion in the third quarter. Now, that was marginally better than expected. The company provided consensus had an average price growth around about 4.7%. Total volumes, though, declined by 3.4% in the period, with own beer volumes down by 4% and non-beer volumes up by 1.4%. EBITDA margin contracted by 29 basis points to 34.9%. And that is not good news. That impacts on the bottom line in terms of profitability. And that's the sort of area the company should be targeting if it wants to see some upside. Now, let's take a look at the share price. You can see that since the highs we had back on shares, what was that? That was all the way up at 62.02 back in March this year. We're being supported, this line of support down here at 49.16. 50.87, if you're short on this, that would be your price target down there. If you're long on that news out this morning, and overall sales were up at marginally better than expected, not a really big number, but it's not necessarily sales I don't think that matter. It's all about profitability and the fact that companies like this are having to deal with inflation. Inflation in some part they can't really pass on to clients and customers, which is why the margins have contracted. And I think this possibly could well be a negative stock story at the beginning of today's session. As I said, a couple of companies reporting before the bell in the US today. I want to begin first of all with the drug company Pfizer. It's expected to deliver a year-over-year decline in earnings and lower revenues. This comes before the US markets get underway later on. It's expected to post quarterly loss of 8 cents per share. Revenues expected to be around 40% down on last year's figure at 13.33 billion. Now, let me take a look at the share price chart for Pfizer. It is an all-session stock on the IG platform, and you can see since this vertical dotted line, since the beginning of the year, where the stock was trading at $50 a share, it's now trading at $30.61. So there's a fair bit of value lost in this, 40% down on shares. 2 weeks ago, it slashed its full-year revenue forecast by 13%. It said it'll cut $3.5 billion worth of jobs and expenses due to lower than expected sales of its COVID-19 vaccine and treatment. So we're looking for news out before the bell on Pfizer. This will start trading at 9 o'clock this morning, all sessions on the IG platform. Another stock that's going to be reporting earnings before the bell is the mining-related heavy machinery company Caterpillar, seen as a bellwether for the mining sector. Forecast to post an increase in earnings and revenues in the third quarter. We're expecting earnings to come through at $4.8, $4.80 a share, compared to $16.50. Compared to $3.95 this time last year. Revenue forecast to rise around about 10% to $16.56 billion. Another all-session stock on the IG platform. Recently, we've seen it disappear below the 50, the 200 period moving average. It opened at 9 o'clock this morning at $242.25. After the closing bell tonight, we get numbers out from Advanced Micro Devices. The street expects the chipmaker to post earnings of 68 cents a share and revenues of $5.7 billion in the third quarter. You remember, Intel produced a good set of numbers out last week. Advanced Micro Devices, well, you can see possibly maybe we've got this line of support down here at 94.70. In August, AMD guided third quarter revenue of $5.7 billion, plus or minus 300 million, and gross margins of approximately 51%. So I think we're well guided in terms of the numbers out today, although this little drop below this line of support down here gives me a little bit of concern, and that opens the door, I think, to lower lows, but it does still depend on what these numbers come through, like when we see the company producing figures after the bell this evening. All sessions on the IG platform, you can trade this when it produces those numbers. Let's move on and take a look at a couple of other areas of the market. One of the news headlines out overnight came through from the World Bank in terms of oil. The World Bank has warned that oil prices could rise to $150 the barrel should there be an escalation of concerns about what's happening in the Middle East. We're trading on Brent at the moment, down below this little slightly skewed and shortened triangular formation. Fairly strong day yesterday, closing down at 2 or 3 week lows. We've seen the market not trade too far away from the close now at 86.60 for Brent. We'll have to see how things there develop. Outside of that, gold, just quickly updating on what's happening there. A little bit of consolidation around the 2,000 level, just $3 shy of that at the moment. It is an up day now today after an earlier fall, but the market's awaiting next sort of move. But this is still an upward trend. If you're long on this, stock goes below sort of 1950 level if you're long on gold at this level. That's it from me. Watch out at the start of today's trade for the likes of Stellantis, BP and Vodafone at the beginning of today's trade. I'll be back at 10:30 with Charting the Markets. I'll be back at 12:30 with Beat the Street as we look ahead to the US markets, after which we get those numbers in from Caterpillar.